subject accounting, let us understand these two important words called transaction and event. Transaction means performance of an act or activity, and event means the end result of it. So activity can be classified into social and commercial or economic. Now this needs an agreement with an exchange of money or money's worth. So here when we say an agreement, there need to be two parties. So transaction means performance of an act or activity, and activity can be divided into social or commercial, which can also be called as economic activity, and means it is something related to a transaction with respect to money. So there two important ingredients are needed. One is an agreement, second one is an exchange of money or money's worth. So in accounting, we are not considering social activity, we are going to consider only the commercial activity. So let us understand this is very clearly. So obviously when I say transaction, now I say the commercial transaction, which is known as very clearly. So obviously when I say transaction, now I say the commercial transaction, which is known as accounting activity, accounting transaction. Fine. So in accounting, we are going to read fully all transactions related to economic or money related activities. So understand it very clearly. There need to be an exchange of money or money's worth, and this should happen between two parties. Very, very important. Let us understand the word called concept. Now, generally, what do you mean by concept? Concept means general idea or notion. Now, this is by and large, when you say concept, which is followed by the universe, the most popular or most of the people in a particular area or a particular country or in a particular society who follow a principle is called as concept. Now, the same word concept is also in accounting, which is known as accounting concept. So, as we have concept in general, we have concept in accounting also. Now, this accounting concept, let us see briefly one by one. Dual, it means double. Aspect means effect. Double effect concept. Fine. As Newton's law says, for every transaction there is an equivalent opposite reaction. Similarly, in accounting also, for every transaction, there are two aspects. So, two aspects, namely, two aspects of each transaction is known as debit and credit. Now, let us understand the meaning of debit and credit. There is no exact meaning for debit and credit. Please understand it very carefully. There is no meaning for debit and credit directly. Then from where these two words had come? So debit and credit had come. So debit is derived from the word called debtor, and credit is derived from the word called creditor. Now let us understand who is a debtor. Debtor is a person who owes to us, and creditor is a person to whom we owe. So here debtor is a person who owes to us, and creditor is a person to whom we owe. Ultimately, from the word debtor, debit is derived. From the word creditor, credit is derived. So, in general, if you look at it, as you take any person for that matter, our parents are our creditors and our children are our debtors. Please understand, because we owe to our parents, and at the same time, our children owe to us. Ultimately, our children are our debtors and our parents are our creditors. Please understand it very carefully. And in the traditional accounting class, our parents are our creditors and our children are our debtors. Please understand, because we owe to our parents, and at the same time our children owe to us. Ultimately, our children are our debtors and our parents are our creditors. Please understand it very carefully. And in the traditional accounting classification, there were only two accounts, namely personal and nominal. So when I say personal and nominal, there were no real originally. Later on, in modern accounting, they brought the real account into classification. So what is real, what is personal, and what is nominal?